everyone, I hope you're doing well. Today we will be looking at a partnership question. Look at question 4.1 and quickly try to attempt it. Okay, let's look at the answers, okay? Financial statements are prepared on the assumption that a business will continue for the foreseeable future. That is the going concern assumption. The income statement is prepared for a specific period. That is the matching principle. Interest on loan is paid on borrowed funds, finance costs. In a partnership, net profit is appropriated for salaries, interest on capital, bonus, and share in remaining profit. Those consist of, we can call that our partner's earnings, and financial statements should be available as close as possible to the date of the period for which they are prepared for reliability. Okay, if you don't believe my answers, you can look at the memo. Okay, let's look at the real reason why we're all watching this video today. Okay, so they're telling me Extreme Traders. It's a partnership with A, Gifford, and N, LiQWYD. And they want me to prepare the capital account and the current account, okay? So we are going to do this, no stress at all, okay? So let's look at the information. They're telling me the following balances and totals appear in the post-adjustment trial balance of Extreme Traders on 29 February 2016. So I know if the year ends on 29 Feb 2016, it starts on the 1st of March 2015, okay? And another trick is, then that means all these balances relate to 29 February 2016, except the current account balances. Those are the balances at the beginning of the year. Okay, so let's start with the information that they gave me, because I'm going to use that to complete the capital notes and the current account notes. Okay, now they're telling me partner Gifford decreased his capital by 180,000 on 30 August 2015. This was properly recorded. No entry has been made for partner LiQWYD's increase in capital by 250,000 on 1 January 2016. Okay, so let's look at Gifford. Okay, so he decreased his capital. He withdrew 180,000. I know my closing balance is 700,000. So I just need to work out my opening balance. And to do that, I will add the closing balance plus the withdrawal, which is 880,000. So I know he has an opening balance of 880,000. This is all necessary so that I can work out my interest on capital. Also my capital note. Okay, let's look at LiQWYD. Okay, so they're saying LiQWYD added money, but that wasn't added capital, but that wasn't recorded. Okay, so now I can confidently say my opening balance is 900,000, and he added 250,000, so it will be a closing balance of 1,150,000. You just add these two. Okay, so now I can put the balance at the beginning of the year of Gifford and the balance at the end of the year of LiQWYD. These are the amounts that are worked out, and I will get a mark for that. Okay, and then the rest, we can just kind of look at the capital note. The opening balance they gave us, the closing balance they gave us. They said LiQWYD added 250k and Gifford withdrew 180k. Okay, so that is pretty straightforward. Now we need to calculate interest on capital. So it was important that I actually work out what was the opening balance and the closing balance of capital. Okay, so let's look at Gifford, okay? So Gifford withdrew 180,000. So for 6 months, his capital was 880,000, and another 6 months, his capital was 700,000. In the question you'll see later, they say interest on capital is 9% per annum. So to get the interest that Gifford earned, I'll say 880k multiplied by 9%, multiplied by 6/12, plus 700k multiplied by 9%, multiplied by 6/12. Once you get these answers, you just add them together to get your interest on capital for Gifford. Let's look at LiQWYD. LiQWYD had capital of 900,000 for 10 months, and then a capital of 1,150,000 for 2 months. Okay, so the interest on capital from LiQWYD will be 900k multiplied by 9%, multiplied by 10/12, plus 1,150,000 multiplied by 9% multiplied by 2 over 12 equals 17,250. Okay, this is just the totals as can be seen on the memo. Everything is exactly the same. I just kind of showed you the steps. Okay, now number C, they say trading stock to the value of 10,000 Rand was taken by partner Ndlovu and incorrectly debited to the account of Gifford. Okay. So we have drawings here. Ndlovu made drawings, okay? But now we actually increased Gifford's drawings instead of Ndlovu's drawings. So what we're going to do is we're going to increase Ndlovu's drawings with 10,000 Rand, and then we're going to decrease Gifford's drawings with 10,000 Rand. And these are the amounts that I should have for drawings. Remember, drawings is going to go in my current account notes. The partnership agreement stipulates the following. Okay, interest I told you guys about was 9%. And then they told me Gifford withdrew a total salary of 546,000 and Ndlovu's salary is 350k and Ndlovu got a bonus of 30k. Okay, so all of this is going to go into the current account. So remember, the partnership's current account and capital account is also for 12 months. Remember, the year ended on the 29th of Feb 2016, but Gifford also withdrew his salary of 31 March for 2016. So Gifford withdrew a salary of 13 months. So we actually only want the salary for 12 months. So let me quickly show you the calculation that I'm going to do here. I'm going to take the whole amount, 546,000 divided by 13 multiplied by 12. And that's the amount that's going to go to Gifford's salary for the year. Okay, so in the answer book, this is the current account that they gave me for partners. So let's put in all the amounts. Okay, so I just blocked out everything that we're going to deal with later. So salaries, I showed you how to work that out. 350k they gave us, the 30k they gave us. Interest on capital we already worked out, and then they told us, they gave us the final distribution of profits. Okay, now we can do a few more things, but we're going to actually do this last, and let's look at the primary distribution of profit and the final distribution of profit. So to work out your primary distribution of profit, that will be quite straightforward. You will just add all these amounts together and then add all these amounts together to get your primary distribution of top profit. You can also total them and add them by the total. So it will now look like this. Okay, now remember, they gave us the net profit according to the profit and loss account. They gave us Gifford's share in his remaining profit as 147,390, and then they said profits are shared in a ratio 3:2 between Gifford and Ndlovu. So we know Gifford gets 60% and Ndlovu gets 40%. I'll in another video I'll show you guys how to do the apportionment, but in this video we don't even need to worry about this. So that's why I'm not going to show it. Okay, so then let me take you up. Okay, so then they gave us this amount. We already worked this out. We know the total of the income statement amount is 1,285,500, and we can add his profit as the profit of the income statement. So just add these two amounts together, then you get 722,490. Okay, so now you can work out Ndlovu's profit as per income statement. You're going to take this 1,285,500. You're going to deduct the 722,490 to get this amount, and then you get 563,010. Okay, now to work out Ndlovu's final distribution of profit, you're going to take 563,010 minus 464,750, and you should get this amount. Okay, so I'm just showing you how to do it without the ratios if they give you information. In another question, I will actually show you how to work the ratios. It's just in this question it wasn't really necessary. Okay, now let's look at our current account notes. So you remember we worked out the drawing, so you just put the drawings amounts out. It's always in brackets, and then all we have to do is you put in the current accounts balance at the beginning of the year, okay? Then to work out the retained income for the year, all you're going to do is you're going to take profit as per income statement minus drawings will give you these amounts. Profit as per income statement minus drawings will give you the retained income for the year. And then you just add these two amounts to get the balance at the end of the year. Deduct these two amounts to get the balance at the end of the year. I really hope this question helped. I know I went through it really quick, so should you have any questions, please do not hesitate to email me. I would love to answer your questions. Thank you for watching the video. I hope you have a lovely day further.